Hi and Assalamualaikum. My name is Siti Nurayu Izzati binti Muhammad Shukri. My matric number is H2482987. We are from Group 13. Today, we would like to present our financial management analysis on Plenitude Berhad and Makmah Group Berhad. Both companies operate within the Malaysian hospitality industry, particularly in hotel operations and property-related activities. However, despite being in the same industry, their financial performance and stability are significantly different, which makes them suitable for comparison.
Assalamualaikum. My name is Siti Nurhafizah binti Omar. Matric number is H24A3698. Okay, I would like to continue about company background of Plenitude Berhad. Plenitude Berhad is a Malaysian public listed company established in the year 2000 and listed on Bursa Malaysia in 2003. The company operates in three main business segments, which are property development, property investment, and hospitality. In the hospitality segment, Plenitude owns and manage more than 2,400 hotel rooms across Malaysia, Japan, and South Korea. This wide geographical presence shows that Plenitude has a strong and stable position within the hospitality industry. In addition, the company emphasizes sustainable development and has demonstrated consistent growth in recent years.
Next, we move to second company, which is Makmah Group Berhad. Makmah Group Berhad, formerly known as Impiana Hotels Berhad, is also a Malaysian public listed company. The company changed its name to reflect a new direction as it undergoes financial restructuring to improve its performance. Hospitality remains Makmah's core business, with hotels operating under the Impiana and WOLO brands. However, in recent years, the company has faced financial difficulties, including losses and high debt levels. As a result, Makmah is currently in a recovery phase, focusing on efficiency improvements and business diversification.
Hi and Assalamualaikum. My name is Nur Afan Mafira binti Lawi. I'm going to present trend analysis of profitability and efficiency ratio for Plenitude. So for Plenitude, asset turnover increased from 2023 to 2024, indicating more efficient use of assets in generating sales. An increase in account receivable turnover together with a shorter average collection period shows that the customer are paying faster, which improves cash flow. Higher inventory turnover and a lower average age of inventory indicates better inventory management and reduced holding costs. In terms of profitability, although the gross profit margin declined slightly, the increase in net profit margin suggests improved control over operating costs. Higher ROA and ROE further indicate that the company is generating stronger returns from its assets and shareholder funds. So next, this graph shows the efficiency and profitability ratios for Plenitude Berhad. Based on the trend analysis from 2023 to 2024, Plenitude demonstrates an overall improving trend in both efficiency and profitability ratios, indicating stronger operational performance over the period.
Hi and Assalamualaikum. My name is Fatin Suzana binti Lauda Faida and my matric number is H24A3001. Today, I will explain the trend analysis of Plenitude Berhad's liquidity performance for the years 2023 and 2024. First, let's look at the current ratio. The current ratio increased from 1.34 in 2023 to 2.96 in 2024. This shows that the company is much better at hedging its short-term needs. In 2024, the company has almost 3 ringgit of current asset for every 1 ringgit of liabilities. This means the company is in a healthier financial position and can pay its bills more easily. Next, the quick ratio improved from 0.97 in 2023 to 2.18 in 2024. This ratio shows how well the company can pay debts without selling inventory. A ratio above 2 means the company has strong liquidity and lower risk of running into money problems. It shows the company can manage its money well in the short term. Then the cash ratio increased from 26.93% in 2023 to 64.4% in 2024. This means the company now has more cash and cash equivalents available. With this ratio, the company can pay almost 2/3 of its short-term debt immediately using cash. It shows the company is very safe and prepared for urgent payment. Lastly, net working capital increased from 119,761 ringgit in 2023 to 514,334 ringgit in 2024. This shows the company has much more money to run daily operations and cover unexpected costs. It also supports the improvements we see in the current and quick ratios. In conclusion, all the liquidity ratios improved a lot from 2023 to 2024. The company has a stronger short-term financial position, more cash available, and less risk of money problems. Next, I will explain the solvency position of Plenitude Berhad for 2023 and 2024. First, the debt to equity ratio increased from 0.19 in 2023 to 0.24 in 2024. This shows the company is using slightly more debt compared to shareholders' equity. Although the financial risk increased a little, the ratio is still low, which means the company's equity is much higher than debt. Next, the debt to asset ratio rose slightly from 0.14 in 2023 to 0.17 in 2024. This means a bit more of the company's assets are financed by debt. Even though it increased, the ratio is still low, showing that most of the company's assets are funded by equity, not debt. Finally, the interest coverage ratio decreased slightly from 5.58 times in 2023 to 5.46 in 2024. This shows a minor reduction in the company's ability to pay interest from its operating profit. However, the company can still cover its interest payment more than 5 times, which is very comfortable and indicates a low risk of default. Next, based on the graph, Plenitude Berhad liquidity improved significantly in 2024, showing a much stronger ability to meet short-term obligations with higher current asset, cash, and working capital. Next, Plenitude Berhad solvency position in 2024 graph shows a slight increase in debt uses, but overall remains strong as the company still has low financial risk and a good ability to cover its interest obligations.
Moving on to Magma trend analysis for efficiency and profitability ratio. So for Magma, asset turnover remain low and unchanged, indicating inefficient use of assets. Although receivable turnover improved slightly, the extremely long collection period suggests serious weakness in credit control. Lower inventory in turnover together with a higher average age of inventory indicates overstocking and poor inventory management. From a profitability perspective, a negative net profit margin shows that the company is operating at a loss. Negative ROA and ROE further indicates that Magma is unable to generate adequate returns and is destroying shareholder value. In this slide, it shows the trend analysis graph for Magma profitability and efficiency ratio. So from the trend analysis graph, Magma demonstrates a weak and negative trend from 2023 to 2024. Despite slight improvement, overall performance for the Magma Berhad remained poor.
I will explain the trend analysis of Magma Group Berhad's liquidity performance for 2023 and 2024. First, the current ratio increased slightly from 1.68 in 2023 to 1.75 in 2024. This shows a small improvement in the company's ability to pay short-term debts. Magma Group has enough current to cover its current liabilities. Next, the quick ratio decreased from 1.03 in 2023 to 0.77 in 2024. This shows weaker liquidity when we exclude inventory. Since the ratio is below 1, the company may have difficulty paying immediate debts without selling inventory. Then, the cash ratio improved slightly from 35.59% in 2023 to 39.39% in 2024. This means the company has better cash reserve to cover its short-term debt using cash alone. Lastly, net working capital decreased from 38,097,138,000 ringgit in 2023 to 36,717,100,000 ringgit in 2024. it is still positive, but this shows reduced short-term financial flexibility and weaker working capital management. Next, I will explain the solvency position of Magma Group Berhad for 2023 and 2024. First, the debt to equity ratio increased from 1.34 in 2023 to 1.79 in 2024. This shows the company is using more debt compared to shareholders' equity. Although higher debt increased financial risk, it may also mean the company took loans to support growth or expansion. Next, the debt to asset ratio decreased from 1.74 in 2023 to 1.56 in 2024. This means a smaller portion of the company's assets is financed by debt. Even though debt is still high, the lower ratio shows better financial stability and improved asset management. Finally, the interest coverage ratio improved significantly. In 2023, the company should not fully cover its interest expenses, which show high risk. In 2024, the ratio increased to 3.82 times, meaning the company can now comfortably pay its interest using operating profit. This shows stronger financial performance and better ability to service debt. That's all from me. Based on the graph, Magma Berhad liquidity shows mixed result with slight improvement in cash, but weaker overall short-term liquidity in 2024. Based on the graph, Magma Berhad solvency in 2024 shows higher use of debt but better ability to manage and pay its financial obligation compared to 2023.
This presentation focuses on a comparison between Plenitude Berhad and Magma Group Berhad. We are comparing their financial performance for the year 2024, which emphasis on four main areas: liquidity, efficiency, solvency, and profitability. The main purpose of this comparison is to identify which company is financially stronger overall, based on their financial ratios and performance indicators. This slide shows the liquidity ratio for both companies in 2024. For the current ratio, Plenitude is higher as about 2.96 times, while Magma is at 1.75 times. This suggests that Plenitude is more comfortable in meeting in short-term obligations. The same trend can be seen in the quick ratio. Plenitude records 2.18 times compared to Magma's 0.77 times. This indicates that Plenitude has weaker immediate liquidity as it can pay its short-term debts without relying too much on inventory. For this slide, we are comparing the cash position and working capital of Magma and Plenitude. Starting with the cash ratio, Plenitude has a higher percentage at around 64%, while Magma is about 39%. This shows that Plenitude has more cash on hand and is in a better position to pay off its short-term liabilities using cash alone. However, when we look at net working capital, Magma records a much higher amount compared to Plenitude. This means Magma has more current assets left after covering its current liabilities, which reflects a stronger working capital position overall. This slide shows the efficiency ratios for the years 2024. First, the server turnover measures how quickly the company collects cash from its customer. A higher turnover means the company is more efficient in collecting its receivables. Next, asset turnover shows how effectively the company uses its total assets to generate sales. A higher ratio indicates greater use of assets. Inventory turnover reflects how fast inventory is sold and replaced. A higher inventory turnover suggests good inventory management, while a lower ratio may indicate slow-moving stock. Lastly, we have ACP, APP, and AAI. ACP means average collection period, show how many days it takes to collect payment from customer. APP means average payment period, shows how long the company takes to pay its suppliers. AAI means average age of inventory, indicates how long inventory is held before being sold. Overall, these ratios help us evaluate how efficiently the companies manage cash flow, inventory, and operational activities.
Assalamualaikum warahmatullahi wabarakatuh. My name is Siti Nama Syarah binti Sabri. My number is H24A3296. Okay, for this slide, I will talk about the solvency ratios, which basically show how strong the companies are in the long run. If we look at Plenitude Berhad, their debt to equity ratio is quite low, around 0.24 times. This means they don't rely much on debt and their financial structure is stable. On the other hand, Magma Group Berhad has a much higher ratio, which is 1.79 times. This shows that Magma depends more on loans, and this increases their financial risk. So overall, Plenitude is more financially secure compared to Magma. Next, for profitability, the difference between the two companies is very clear. Plenitude Berhad is making profits with a net profit margin of about 11.9%. This shows that their operations are quite efficient and well managed. But for Magma Group Berhad, the situation is the opposite. They require heavy loans, and that's why their net profit margin is very negative. Plenitude also has positive ROA and ROE, which means they are able to generate returns from their assets and shareholders' money. Meanwhile, Magma negative ROA and ROE show that the company is struggling and not creating value for shareholders. So, to conclude this part of the cross-sectional analysis, based on the ratios that we discussed, Plenitude Berhad clearly performed better than Magma Group Berhad in 2024. Plenitude is more stable, less risky, and consistently profitable. And in contrast, Magma is facing several financial and operational problems, especially in terms of efficiency and profitability. Therefore, based on this comparison, Plenitude Berhad can be considered the stronger company financially.
Assalamualaikum and good day everyone. My name is Warushazana Anissa binti Wan Hazmi. My number matric is H24A3107. For Plenitude Berhad, the overall analysis shows strong financial performance across liquidity, efficiency, solvency, and profitability ratios. Firstly, the company demonstrates excellent liquidity as indicated by high current and quick ratios, which shows its strong ability to meet short-term obligations. In terms of efficiency, Plenitude performed well with faster receivable collection, healthy inventory turnover, and effective asset utilization. In addition, the company maintains a low level of financial risk due to its stable capital structure and strong interest coverage. Overall, these results indicate that Plenitude Berhad is financially stable, profitable, and well-positioned for long-term growth.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurhani Najwa binti Muhammad Zaid. My number matric is H24A3390. Overall analysis for Magma Group Berhad, the company is facing financial and operational challenges, even though it operates in the same industry. In terms of liquidity, Magma show a weaker position, mainly due to a low quick ratio, which indicate limited short-term cash flexibility. Next, the efficiency ratio highlight serious issue. The company has very slow inventory movement and long receivable and payment periods, showing poor operational efficiency. From a solvency perspective, Magma has high leverage, which increase financial risk and show a strong dependence on debt financing. Finally, Magma recorded persistent losses, resulting in negative profitability and a decline in shareholder value. Overall, this indicates that the company is experiencing financial distress.
Conclusion, Plenitude Berhad and Magma Group Berhad represent two very different financial conditions within the same industry. Plenitude demonstrates strong financial health and long-term sustainability. On the other hand, Magma requires continuous restructuring, improved efficiency, and stronger financial control to recover. This study shows how financial ratio analysis plays a crucial role in evaluating company performance and guiding strategic decision. That's all from our group, from us. Thank you.
This is appendix for Plenitude Berhad.
This is the appendix Magma Group Berhad 2023 and 2024.